All right, good morning. This is attempt number 3 to get this webinar going. But anyways, I think you're here now. G'day, mate. So today is a very interesting day for Forex traders. Not only do we have an ECB meeting, and not only do we have an election in the UK, but the EC meeting is Christine Lagarde's first press conference. Yay! So Christine Lagarde used to be the finance minister of France. Then she ran the IMF, and now she's running the ECB. Now, not only is she good with money and have a background in money, but she's also a politician, and this is really good. This might be something that the ECB needs, because Draghi was not a politician, right? So I don't know if he fixed things in the financial system of the European Union, right? And really, I think you need a politician to do that. So I don't know. I got lots of hopes. I've always liked Christine Lagarde. So, I remember talking with my wife. I'm like, hey, there's all kinds of, imagine if Hillary Clinton, Angela Merkel, and Christine Lagarde ran the world. Could be an interesting place. Anyways, let's go. 3, 2, 1, let's go! Making the music confusing, but you can't do what you know. Jigga, jigga, jigga. The what? Jigga who? Brace, how low can you go? So let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never ever risk money you cannot afford to lose. Hi, my name is Wayne. Nice to meet you. I'm a currency trader just like you. I'm also the chief FX market strategist for TradersWay.com, a boutique foreign exchange trading firm that would like to earn your loyalty and respect by sponsoring the Forex.Today YouTube channel. So if this stream is important to you, if having these videos are important to you, if having a community is important to you, show it to Traders Way by visiting TradersWay.com, opening up an account. Demo account just takes a few seconds. Then download MT4, check out the execution speed. It's fast. Check out the spreads. They're small. Check out the swaps. They're huge. Check out the customer service. Amazing. If you don't like spreads, by the way, you can have an ECN account. Yeah. Cool. So, TradersWay.com. Pay it back, huh? Show that these webinars are important to you. Also, communicate to YouTube that this is quality content. You do that by a thumbs up. Please do that now. If you're new, please subscribe. And then always, would you please leave a comment on a video? So like you'd be commenting on yesterday's video and you're like, hey, that was really good. I learned something new. I really liked the Baltic Dry Index stuff. That was a fascinating example of forward-looking economic analysis of the macro economy, right? Okay, great. So please do all that. Okay, what are the benefits in the ECN? Instead of paying a spread, you pay a commission. Hard dollars versus soft dollars, whatever, man, whatever you want. So thank you for being a part of the community. Thank you for being here every day. Thank you just for being in my life. Okay, so anyways, I'll leave that alone. I'll get that out of the way. We'll leave that alone. And I will attempt to bring up the ECB press conference, and we'll watch that together. And I think it's pretty interesting. I think it's going to be pretty interesting. I think this is going to be pretty interesting. So I'm looking forward to it. Anytime you got someone new in charge, it's important, okay? So Christine Lagarde now runs a committee that can change the life of every European by impacting things like their borrowing costs and their day-to-day life, and all that kind of stuff. It's really a powerful position. Now, Christine Lagarde is new to this position. We don't really know what to expect. Also, the chief economist is gone. So there's a new chief economist. So that's like basically the number 2 at the ECB is gone. And then I think we have a voting member leaving in 2 weeks, like at the end of the year. So like basically half of the ECB and the two most important positions in the ECB are new. And that brings uncertainty, that brings risk and all that kind of stuff, but it also brings hope. So you never know, right? So the press conference should start. I think they're going to do, I don't see anything on their channel though. They don't have a live scheduled event. I don't see an event there actually. So we'll have to pick it up somewhere else. Somebody's going to be covering it live. That's really strange. I'm looking at the European Central Bank's YouTube channel. And they want to communicate Christine Lagarde's analysis to the world, but that doesn't include the internet. Come on, ECB. Seriously? It's amazing, huh? They got 10 million subscribers. They're like, nah, no one's going to watch our YouTube channel. So anyways. Amazing, huh? It's just, all right, well, I'll have to pick it up. One of the news outlets will cover the press conference, and so we'll watch that together. Yeah, I know it hasn't started, Norman, but you would schedule an event if it was a press conference. So there should be a scheduled event on the ECB. I don't think they'll just pop it live, but maybe they will. So we'll be there together when it happens. All right. So let's just go around the world. We got like 15 minutes before that happens. That's cool. And look at that. Nothing's really happening here. We wanted it yesterday to be a little bit lower. It went a little higher. Well, but remember, it's climbing the steps, right? But the big question here is this. Oops. No drawing tool, huh? Is this the significant change? Well, breakout pullback to the trend line is actually the standard operating procedure for trading a breakout, whether it's a horizontal breakout or a sloped, Y times M plus B. If it's a slope trend, it's the same thing. You break out and then pull back, roll reversal, and down if that's what you want. Of course, that's what I do want, and that's going to influence the way I see it because it's called confirmation bias. Okay, so anyways, got my drawing tool working here. So the general idea would be like this, okay? That's what we talked about yesterday. Actually, we talked about that earlier in the month because we were preparing. Remember, I bailed on everything, and then I said I want this to come down. So it came down hard and fast. Looks like a 618 Fibonacci retracement off the left shoulder, which I think we also talked about, right? Didn't we talk about this? Like that was the macro plan, right? Hey, by the way, where are my British friends? How's the election going? What's going on? How's that going? You guys got boots on the ground. Tell us what's going on. Here's what I'm thinking, right? You buy the rumor, but you sell the news, right? So, right? Oh, is it up there? They just scheduled it? How awesome is that? Europeans. I love my European friends. I always bag on my European friends, right? So I thought about this the other day and I'm like, you know what? That's a pretty lame friend. So I apologize, guys. I call my European friends, you know, socialist pig dogs and all that kind of stuff. But I call American capitalist pig dogs, but I don't know if that always comes across as fair and balanced. So to my friends in France and to my friends in Spain, to my friends in Germany and Liechtenstein. Go Belgium. Whoop, whoop. Sorry, guys. Should be more fair. Euro trash. My wife doesn't like it when I talk about ugly Americans. So, anyways. Nobody likes to be put down, so I apologize. All right, so let's go back. Oh, I'm trying to get you. You got too many windows open. Let me get back to that ECB. We are socialist big dogs. Where are you located, Tony? I thought you were a different Tony. I thought there was a Tony Cali in California in like wine country. But where are you, man? Is that the same Tony Cali? Or is there a new, different Tony Cali? You're like, I'm the only Tony Cali I knew. London, huh? I miss me in London. All right, I don't see it. Whoever said they put the press conference, I don't see it. Should be right there, scheduled, and click to get to reminder. So, yeah, I think there's a Tony Cali in or near Napa that was part of FX Bootcamp many, many years ago, probably even 10 years ago. And he was a nice guy just like you, Tony. So you got a brother somewhere, brother of another mother. All right. So anyways, you can see we got it on this one. We got an inside move, right? You see this? And then on the smaller time frame, there's this. And of course, this was what we wanted to be resistance, almost 2 weeks ago. So, I would love for this to head down. Oops, that was supposed to be pink. I would love, come on, pink. There we go. I would love for this to head down, but I can't force that. But that's like still how I see it. Of course, I don't like this, but that's probably news-related noise. And remember, today, remember how many times over the last year have I talked about the 12th of December, which is today? This is the 12th, right? So this is actually supposed to be the turning point. The day after the Fed meeting, okay? And so we're on the 12th. So by Monday, was that the 15th or the 16th? Anyways, by Monday, I definitely am going to try to get short, okay? And so I have to ask myself, is it today? Is it tomorrow? Is it Monday? Okay? So, I don't know if I'm right. There's nothing here to say I'm right. But, I did call this 6 months in advance. So, I would love to see that. Thank you, currency traders. I see you're being blocked. But it's not even posting the whole length. But, anyways, let me get it. We got it, guys. Apparently, the ECB, they must have it posted somewhere else. This is just killing my bandwidth, too. Lagos in the house! Yeah, but what? I mean, I have to type in what... Yeah, the whole thing isn't there. Just post the whole link, and it'll get blocked, but I can still see it even though you're blocked. But I guess what you're saying is someone else is covering it on YouTube from somewhere else. Right? YouTube or ECB isn't covering it. Someone else is covering it from somewhere else. I guess I could just do it from the ECB website. That's what I used to do, right? I just thought that they would get past that by now. ECB dot, what is it, INT? I guess ECB Europa. Europa! Yeah, cash, that's all part of it, cash. That's all part of it. The trade deal. So I'd love for the UK get what they want, and yet the pound drops like a ton of bricks. I would love for Trump not to do a deal with China. Okay? So yeah, they're just posting it somewhere else, huh? Oh, look at this. Yeah, the government has to get involved. about cookies. Isn't that funny? Talk about overbearing, huh? Okay, ECB, so this feature requires cookies. Okay. What am I doing? Blocking cookies? I'm not blocking cookies. Stupid son of a... I'm blocking cookies. Why is this so big? Play. This feature requires cookies. I'm not blocking cookies! I think this is killing my bandwidth. Seems unusually oh, this is terrible. There we go. Yeah, really slow internet. That's really terribly slow. I guess with all the streaming, everything's slow. And I can't believe it. Yeah, but I'm not blocking cookies. Cookies, modify it. I understand. So stupid. What a waste of government. What are they going to do? Send out the cookie police now? So stupid. So where do they put this? They don't put it on their website. They put it somewhere else. They have more than one YouTube or channel. Amazing. All right, cool. So we got a few minutes. We'll watch this together. Cool. We got about 2.5 minutes before it starts. Well, I can't max the window because you're seeing less than 1/2 of my screen. So if I max everything, you can't see everything. I can't broadcast something that resolution. All right, cool. So we'll get that. Okay, we'll get that. So let's just burn through this quickly. Beast caught on the top. Okay, this is the projected high for the month of December. We've talked about this. December high. We talked about this. I showed it to you. We talked about it. I said things like, you could, if you were conservative, just take the rest of the year off, right? Go spend time with your children. Go put on a Santa Claus suit. Remember that? We were here and I'm like, you can just go put on a Santa Claus suit. Okay? So remember, I'm hoping, okay, even though we have all this news, I can't predict it, but that's what I'm hoping for. So if I get that, maybe I can get short, right? All right, cool. So that's that. Let's take a look at CAD yen. This is the up, the down, the up, the down. So as you can see, I just got sick of it. So I took the risk off the table. Okay. That's not what I want, but I do want down. Okay. This is not working on a weekly basis for me. So really 48.50, which is basically where we are now, is really my next week's sell position. So one way you could look at that is I can say template, what do I call it? Swing trading bearish weekly. Go into a 15-minute chart. And as you can see, this is the price I want to be short next week. Oh, well, that's where we are now. So I think right now that's a lot of hope. But nonetheless, next week I do want to be short. Right? So therefore, I have to try to get short maybe this week. Do you know what I mean? Sounds like you... Almost sounded like a U2 song there. I want to run. I want to hide. Okay, WTI caught here. Once again, over a week ago, we saw a weekly target, monthly target. That's the projected high for oil, right? We said we had all these forces keeping WTI below 60. Cool. Well, that's happening. Once again, is there a trade here? Not really, not on this time frame anyways. But you have to decide, is this a breach? Is that a breakout? If so, the breakout you trade like this. Okay? Which means you want to look at next week's sell zone, which is here. And you set that up. You should get short now. All right, they're walking in. Look, Christine Lagarde in a pantsuit. Nice. She's so cool. You gotta have the scarf, man. You gotta have the scarf. But you know, like, she's classy. I like her. Like, she's got the pantsuit on, the scarf, and like a low-cut V on her shirt. Like, she's strong and feminine. I think that's really cool. All right, I hear two sets of music maybe. Why are they still playing music? Or is it me watching two things, no? Yeah, it's them playing music twice. There we go.
Ladies and gentlemen, welcome to our press conference. Today is the first time that I have had the privilege and pleasure of chairing the monetary policy meeting of the Governing Council of the ECB. And I'm delighted to proceed now with reporting on the outcome of our meeting.
I'm so excited!
With my friend, the Vice President. The Governing Council meeting was also attended by the Commission Executive Vice President, Mr. Valdis Dombrovskis. Based on our regular economic and monetary analysis, we decided to keep the key ECB interest rates unchanged. We expect them to remain at their present or lower levels until we have seen the inflation outlook robustly converge to a level sufficiently close to or below 2% within our projection horizon. And such convergence has been consistently reflected in underlying inflation dynamics. On November 1st, we restarted net purchases under our asset purchase program at a monthly pace of 20 billion euros. We expect them to run for as long as necessary to reinforce the accommodative impact of our policy rates and to end shortly before we start raising the key ECB interest rates. We also intend to continue reinvesting in full the principal payments from maturing securities purchased under the APP for an extended period of time past the date when we start raising the key ECB interest rates, and in any case for as long as necessary to maintain favorable liquidity conditions and an ample degree of monetary accommodation. The incoming data since the last Governing Council meeting in late October point to continued muted inflation pressures and weak euro area growth dynamics, although there are some initial signs of stabilization in the growth slowdown and of a mild increase in underlying inflation in line with our previous expectations. Ongoing employment growth and increasing wages continue to underpin the resilience of the euro area economy. The comprehensive package of policy measures that the Governing Council decided in September provides substantial monetary stimulus, which ensures favourable financing conditions for all sectors of the economy. In particular, easier borrowing conditions for firms and households are underpinning consumer spending and business investment. This will support the euro area expansion, the ongoing build-up of domestic price pressures, and thus the robust convergence of inflation to our medium-term aim. In the light of the subdued inflation outlook, the Governing Council reiterated the need for monetary policy to remain highly accommodative for a prolonged period of time to support underlying inflation pressures and headline inflation developments over the medium term. We will therefore closely monitor inflation developments and the impact of the unfolding monetary policy measures on the economy. Our forward guidance will ensure that financial conditions adjust in accordance with changes to the inflation outlook. In any case, the Governing Council continues to stand ready to adjust all of its instruments as appropriate to ensure that inflation moves towards its aim in a sustained manner in line with its commitment to symmetry. Now let me now explain our assessment in greater details, starting with the economic analysis. Euro area real GDP growth was confirmed at 0.2% quarter-on-quarter in the third quarter of 2019, unchanged from the previous quarter. The ongoing weakness of international trade in an environment of persistent global uncertainties continues to weigh on the euro area manufacturing sector and is dampening investment growth. At the same time, incoming economic data and survey information, while remaining weak overall, point to some stabilization in the slowdown of economic growth in the euro area. The services and construction sectors remain resilient, despite some moderation in the latter part of 2019. Looking ahead, the euro area expansion will continue to be supported by favorable financing conditions, further employment gains in conjunction with rising wages, the mildly expansionary euro area fiscal stance, and the ongoing, albeit somewhat slower, growth in global economy. This assessment is broadly reflected in the December 2019 Eurosystem staff macroeconomic projections for the euro area. These projections foresee annual real GDP increasing by 1.2% in 2019, 1.1% in 2020, 1.4% both in 2021 and 2022. Compared with the September 2019 ECB staff macroeconomic projections, the outlook for real GDP growth has been revised down slightly for 2020. The risks surrounding the euro area growth outlook related to geopolitical factors, rising protectionism and vulnerabilities in emerging markets remain tilted to the downside, but have become somewhat less pronounced. According to Eurostat's flash estimate, euro area annual HICP inflation increased from 0.7% in October 2019 to 1% in November, reflecting mainly higher services and food price inflation. On the basis of current futures prices for oil, headline inflation is likely to rise somewhat in the coming months. Indicators of inflation expectations stand at low levels. Measures of underlying inflation have remained generally muted, although there are some indications of a mild increase in line with previous expectations. While labour cost pressures have strengthened amid tighter labour market, The weaker growth momentum is delaying their pass-through to inflation. Over the medium term, inflation is expected to increase, supported by our monetary policy measures, the ongoing economic expansion, and solid wage growth. This assessment is also broadly reflected in the December 2019 Eurosystem staff macroeconomic projections for the euro area, which foresees annual HICP inflation at 1.2% in 2019, 1.1% in 2020, 1.4% in 2021, and 1.6% in 2022. Compared with the September 29 ECB staff macroeconomic projections, the outlook for HICP inflation has been revised up slightly for 2020 and down slightly for 2021, mainly driven by the expected future path of energy prices. Turning now to the monetary analysis, broad money M3 growth stood at 5.6% in October 2019, unchanged from September.
Hey, she just talked about M3. I taught you about M3 about 3 days ago.
For the private
You're
sector
welcome.
and low opportunity cost of holding M3 relative to other financial instruments. The narrow monetary aggregate M1 continues to be the main contributor to broad money growth on the component side. The growth of loans to firms and households remain solid, benefiting from the continued pass-through of our accommodative monetary policy stance to bank lending rates. The annual growth rate of loans to non-financial corporations increased to 3.8% in October, compared with 3.6% in September, while the annual growth rate of loans to households continued on its gradual upward path, reaching 3.5% in October. Our accommodative monetary policy stance will help to safeguard very favorable bank lending conditions and will continue to support access to financing across all economic sectors, and in particular to small and medium-sized enterprises. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirmed that an ample degree of monetary accommodation is still necessary for the continued robust convergence of inflation to levels that are below.
I think I'll use
but
this
close to
as an
2%
opportunity to show you how the OCO works.
In order to reap the full benefits from our monetary policy measures, other policy areas must contribute more decisively to raising the longer-term growth potential, supporting aggregate demand at the current juncture, and reducing vulnerabilities. The implementation of structural policies in euro area countries needs to be substantially stepped up to boost euro area productivity and growth potential, reduce structural unemployment, and increase resilience. The 2019 country-specific recommendations should...
All right, I'm going to pause her for a second. I want to show you how the OCO indicator works. So I threw down something called auto stop. It's on metatraders.com. And I want to show you this. I'm just going to throw down a sell trade just for fun. So I throw down a trade, and then automatically it put a 25 pips stop loss. And I have to back out now onto a 15-minute chart. And it threw down, so there's the entry, and then it threw down a 50 pip, if I can find it, so far away, a 50 pip take profit. And it does it automatically. So while I'm waiting for a scalp, for example, I can decide on how much risk I want. So when you enter the, where am I going to find this? Hang on. Okay, when you turn the EA on, you can say, okay, take profit at 50 pips. Put the stop at 25, so I know I'm risking only 25 pips. It's nothing. right? Hardly anything. And I'm going for 50. Now, of course, I can manually change these things, but the thing is, when I'm in a scalping mode, I can determine how aggressive I want to be, how much risk I want to take, depending on market volatility, depending on where the closest level of resistance. So I got like a little bit of price action resistance here. I got the psych level of 150 here. My stop's above all of that. And yet I can still move my stop and adjust and say, well, I don't really need 25 pips. I can move it down to 20 pips because I'm held down by price resistance and then the midpoint psych level. And I can say that's more than enough. So now I'm risking 20 to get 50. Again, it's just a scalp. I'm not saying this is a good trade. In fact, it's not a good trade. But I'm just showing you how to use this tool, right? And then I can say, well, 50 pips might be a little too aggressive. Where is this? 108.90. So why don't I move this a little bit closer and say, you know, just above 109, I'll get out for profit. And I can adjust all of this kind of stuff on the fly. So I can say when I'm in a scalping mode, sometimes I do something like 15 OCOs. 15, that's nothing, right? Or if there's more volatility, I can say I can do 20, 50. Or sometimes I do 150, 300 if I'm swing trading. Or 100, 333 if I'm swing trading, right? You see, like, you can predefine the type of trade that you're setting up. Okay? Now, the interesting thing is, the way that an OCO works is that if price comes up now, so Christine Lagarde says something in the press conference, and and this jumps. So let's get rid of this stuff I don't need. Hang on. I want to make sure you're following here. Oh, that's in the way now. That's probably why I never had it in the middle before. And delete the regression. Okay. And let's delete this. I just want to put that there to say that's protecting a sell trade because that's obviously going to be resistance. So let's delete that. All right. So what I'm saying here is I've now identified that my maximum risk on this trade, again, it's a piss poor trade. I'm not saying it's a good trade, but the maximum risk I have on this trade is about 20 pips, whatever that is. Okay. And if this gets hit, it offsets this. So this is a buy trade to offset my short trade. So that's offset. So this trade gets taken out and this one's taken out because it's a offsetter. And then this one is still in the market, right? So that trade offsets this trade, but cancels this one. So the OCO is one, cancels the other. Okay? And this is like old school because back in the day, if you had a stop, it didn't always take, like this stop would take this trade out, but it would leave this one open. And every stop, as you probably saw me on Bloomberg, right? One of the things I said on Bloomberg television was, every time I trade, I have two stops, one for profit, one for loss, right? So in this case, this one, because it enters a long trade, offsets the short trade and cancels this. Or if I hit this and I hit profit, this is a long trade that offsets the short trade. So that's taken out of the market for profit and cancels this one. Okay? But what I like about using OCOs is that it's like writing down a contract for your trade. You're saying my risk here is 20 pips and my reward is 40 pips. And I have multiple reasons that this will hold for me, so I'm okay risking the 20 pips. And now you could actually walk away from this trade, right? Okay. Yeah, JF, I said earlier that I expect it's a buy the rumors, sell the news type thing. So that's why it's pound yen has volatility. Okay. So anyways, guys, I just wanted to use this as an example. Like if you're trading the news, if you're scalping the news, that's a tool that I use all the time. Really for almost every trade. Throw down an OCO, but especially for scalping. So if I was just scalping, like filling a couple of hours of trading, I love doing things like 15-15 OCOs, 25-25 OCOs. But now the market's so slow that 25-25 OCOs take half a day, where it used to take like 8 minutes, right? So anyways, it's still a very useful tool. And again, it's because you're basically throwing down a contract with yourself. You're like, okay, my risk should be 25 pips. My reward should be 50, not because of the risk-reward ratio, but because where you think resistance is and where you think your profit target is, and you just simply move it. So you might just simply move your short take profit down to weekly or monthly M1, regardless of anything. And here's the thing. You can throw down a limit order and have your OCO running. So this is a buy limit order. So let's say I was a bull, right? This could come down, hit this order, which goes from a working order to a market order. Then the market order gets executed. Now you're long in the market. And then the EA says, oh my God, he just bought. And then it would, based on your predetermined risk reward, throw down a stop, put in the limit, and you're golden. Now you can have the limit order and the risk reward all pre-calculated. So now you can just set it and forget it and take a walk, because you know your stop and limit's going to be there, okay? So that's that. That's okay. Now, if I was going to shorting higher would have been a lot better. I just want to show you how to use the OCO, okay? And watch. Got to cancel this stuff, right? Okay. So I canceled the order, and check this out. Where's my stop and where's my limit? They're out. They're gone. Isn't that nice? So that's cool, right? So I don't know if you guys are using the tools enough, but there's one way to do it. So I can show you another example, okay? I'll show you another example. So you got to look up to the top right and see the auto stop, and it's smiling, which means it's working, okay? I can check the EA and check the settings. And let's say I want to change this. Let's make this 20, and let's make this 20. So risk reward ratio is 1-to-1. I'm just throwing it down. Now, what I actually do, guys, is I set it like, let's say 25.50. And then when I see it execute, I can adjust. So you don't even have to be that accurate. You don't have to plan this out and say, well, this needs to be 18 pips there and this has to be 44. No. Just drop it, right? And then adjust the way you want. So I just want to show you like what a 2020 OCO, this would be like a scalp, right? So I've indicated I want to scalp, and let's say I drop into a 1 minute, and then I say, okay, I'm going to sell here. Watch this. Sell. Needs a tick. It needs a tick. Where'd it go? Oh, I thought I'm too zoomed in. Sorry about that. I want to do it again so you can see it. All right, let's do this. Okay, now they're gone. You notice that? I close the trade, and it cancels the two other orders. It's beautiful, right? So let's try it again. I decide to sell. Okay, and boom. See? There's the target below, and there's the stop above. Nice, right? Come on, that's what I'm setting up, my friend. Yes, you have to have auto trading set because it's an EA. Yes. Okay, cool, right? And then I hit panic mode and I'm like, no. Cool, right? Now, if it came down and hit the lower one, it cancels the other two. If it goes up and gets stops, it cancels the other two. It's really nice. Okay. Hey guys, all my tools are on metatraders.com. The basic tools are $5, and then you can get all the other ones as well. All right. I just don't have time to be manually sending people stuff all the time. All right. So let's, so people want to see Eurodollar. Okay. Okay. Actually, let me show you this one in the sense of setting it and forgetting it. Okay. So I throw this down. Okay. And the stop should be placed there. Okay. Come on. There it is. So now I have a 2020 OCO. I'm short near resistance. And check this out. Now I can ignore it. Okay. Now I can ignore it. So I'm going to change this to Eurodollar. And I can ignore it because I know my worst case scenario is I lose 20 pips. But I already calculated all of that. Now imagine though I have more like 2100. That would be a better trade. A 20 pip risk for a 100 pip limit. Okay, that would be a much better trade. So we can try another example of that up here. Okay, let's say I'm a bear. Okay. All right, is the little happy face here? No. Is this correct? Yep. So I have to set this now. So I go to my EA, I throw it down. What do you guys want to do? 2550 OCO? No, let's do a 2525 OCO. Okay. I said, okay. Now, notice it's not asking you if you're long or short. It just recognizes that. So let's say I want to be short at 111.42. I hit that. And there's the target. And there's the limit. Or there's the stop. So then I can say, well, you know, my stop really should be a little higher than that. Okay. And now it's all done. You see? Yes. There's, right? It's cool, right? In particular for scalping, but I use it for everything. So let me bring back, stupid Windows. Who invented that? Shake a window, make everything go away. Who would want that? Oh, well, your boss might be looking at you doing porn at work. Oh, okay. All right. Funny thing, a programmer would invent that, huh? Oh, let me throw this down.
Get to your core objective. Do you think there's a risk of Japanification in the Eurozone? Thanks.
On the first point, the reversal rate. My understanding of the reversal rate is that you are facing a reversal rate when credit begins contracting. That's how, in economic theory, the reversal rate is defined. You know, given the progression rate that
she's
we're
showing
seeing
that education.
3.8%, the most recent one in the non-financial corporate sector.
Well, Russell, we've had like
and
10 years of
growing
it, and
in
of course
the
it's
household
not working.
sector. You know, that certainly does not meet the definition of credit contraction. We are still seeing credit expansion. Are we attentive to that credit expansion and those credit numbers? Of course we are, because it's clearly one of the clear objectives that we have to facilitate the financing of growth, to facilitate the investment, to facilitate the creation of employment, and so on and so forth. So we are not seeing it, and of course we are looking very carefully at the indicators of credit growth in the economy. Weak growth, yes, it is weak growth, and it's not at potential. We're seeing reaching towards.
Let's see if this works. I think this is the right video. That's the CEO of Forex.com.
Bloomberg Educated Investor is brought to you by DBFX from Deutsche Bank.
Trading currencies, like many investments, can be risky business. The 24-hour-a-day market is highly speculative and extremely volatile, so you'll need to have a trading plan in place before you begin.
There's no 4 o'clock close. I need to realize that price action will continue on beyond in a 24-hour fashion, so let me understand and learn the tools that are there, like orders.
When you put in an order, the way that you manage your risk is by using stop losses and limit orders. You put in a stop order that says if things go bad, if your analysis was wrong and you start to lose money at a certain point, when that stop loss order is triggered, you're taken out of the market before things get worse.
Then there are limit orders that protect you when you're making money on the trade. They are also called take profit orders.
A lot of times what people will do is that they'll see their position move in their favor and then they'll let it completely reverse against them.
McDonald protects his trades using both tools, and when one is triggered, it cancels the other. It's called an OCO order.
When I place an order, I actually place 2 different orders, a stop loss to protect me from the downside and a limit order to where my profit target is.
Another phrase in the language of FX is being stopped out.
Let's say you want to go long, you're buying, the market turns sour on you, you're losing money. You have a stop loss order in place to protect your downside. When that stop loss is hit, you're stopped out.
With a proper risk plan in place, you have a better chance of surviving losing trades and profiting when you make winning ones. Thanks for watching Bloomberg, The Educated Investor. I'm Carol Biaggi.
Cool, right? Wait, did you hear any of that? I thought I muted my mic, but it's still running, so I hope I didn't mute the wrong one.
Potential in the medium-term horizon, you know, the 1.4% for 2022. We're getting close to the growth potential of the euro area, and it is. It would be very welcome.
I look like a teenager there, huh?
Other policies join the monetary policy in order to support.
I'm so glad that I'm getting better looking every day.
And to arrive at that growth potential and why not exceed it. So that would be very welcome.
What a
both
blessing.
in fiscal terms and,
lots of gratitude.
structural reform terms as well. Japanification, I don't think that we are there at all. And I think that there is certainly from the enterprise credit, there is a major difference between the situation that Japanese enterprises are or Japanese households are relative to the situation of the euro area equivalent. And I don't think that Japanification is in the cards at all.
Ms. Bufacchi? Isabella Bufacchi from Sole 24 Ore. If I may, I have 2 questions and go back to the toolbox and negative rates. As Governor Ignazio Visco from the Bank of Italy said in a recent interview with Handelsblatt, I'm more in favor of asset purchases compared to negative rates. The impact of negative interest rates is small, and with potential.
Hey, ladies,
negative
when you're on
side
TV,
effects.
don't put your glasses on your
The
head.
impact of asset purchases is
Just-
larger
I'm just saying.
and more widespread. What is your opinion on this comparison? And then, if I can go back to what you said just now, the welcome of fiscal policy. I've recently asked influential US CEO how you viewed fiscal policy and monetary policy in the relationship. And he told me that there is nothing wrong for a central banker to sit at the table with ministers and to discuss with ministers about growth and what can be done. And he said, well, they decide I do A and B and you do C and D.
No, I was older than
And
that, Barry.
This, he said, doesn't put in danger the independence of a central banker. What is your opinion on that? Thank you.
I think I was 36 there
All
about
right.
that.
On the toolbox, I'm not going to revisit the past. Number one, policy
Don't
decisions
push
that
Christine
were made
around.
stand and were re-endorsed yet again. And my view of it is that they form a package. There were several components to that package. And I think that the intention was for some of the measures, such as the interest rate, to actually have an impact on the short-term end of the yield curve. The forward guidance that was also part of the package that gives a clear calendar and induces an automatic adjustment depending on the state of the economy. Also gives is intended to have an impact on the medium-term end of the curve, and the asset purchase program that was reinitiated is intended to have an impact on the long end of the yield curve. Based on what we are seeing, all three seems to have had their impact, and certainly it has been perceived as such. So I'm not going to dissect between each and every item of the package. I think that they are there together. The two-tier system was clearly an additional attribute in order to deal with some of the negative effects that you've referred to, and is also part and parcel of the package. I wouldn't take a view on one element or the other. On the other point that you made, to me,
was it just 20 minutes ago I said
that the central bank be
143.30 would be
and
the
that
short
in
on
all
pound
its,
yen based on next
operations,
week's pivot
behaviors,
points? Looks like we
its
dropped about
independence be
70
respected
pips since then.
and be valued. But what you described to me is a policy mix of first order, except that I would put A, monetary, because this is our shop, B, fiscal, because that's the next possible tool that can be used, and C,
I love how
structural
her
reforms.
accent goes
So
from
it
French
takes
to British.
many
Do you
to
guys
actually
hear that
dance,
every so often?
The economic ballet that
all of a
would,
sudden there's
would
like a
deliver on
distinctly
price,
British
price
accent.
stability, but also employment
And then straight
growth.
back to
I don't
French.
see anything wrong with policymakers actually agreeing that they're going to take make the efforts that they can in order to reach their respective goals.
Mr. Ferris?
Tom Ferris from the Wall Street Journal.
Hey, how are you guys doing? Are you all right just sitting here watching the ECB meeting
We're
together?
discussing
Are you cool with that?
merits of the two instruments, or the two main instruments at your disposal, the negative interest rates and QE. I wonder if the economy were to worsen next year, if there was one that you think would be more appropriate to use first, that maybe had less risks attached. Some people on your governing council, for instance, are much more concerned about QE as a policy tool. I wonder if you share that concern and see QE as more of an exceptional, unconventional tool. My second question was also about...
Well, my Harvard degree is glowing.
Your governing council.
That's really cool.
There's been
I just paid a big
certain
Harvard bill
disagreement
yesterday.
in
It
recent
better
weeks
damn well
over
glow.
policy, public disagreement. your predecessor was worried about publicly challenging the ECB's decisions. Is this a concern that you share, that if national central bank governors criticize the ECB's decisions, that could be harmful for the institution? Thank you.
I see exactly where you're trying to get me. But, once and for all, I'm neither
Luckily,
dove
I'm down to like
nor a hawk.
$18,000, and
my
I
ambition
finally
is to
will
be
finish
this
off my
owl.
degree. Just an $18,000 more. Boom!
It's also often
Get my
associated
degree.
with a
That's
little
how I
bit of
look at it.
wisdom.
It's not even the work anymore. It's just
I'm
the
not
money.
full of vanity.
I want to
but
quit,
I will
but I'm
certainly
like,
try
yeah.
to bring the best out of members of my governing council in order to arrive at monetary
take the
policy
money, just give me
decisions
my degree.
and use of instruments that will be as consensual as possible. I'm not suggesting that we will arrive at complete agreement on everything, and I'm sure that the strategic review, particularly in our definition of the medium-term objectives and how we go about it, will be a source of great debates amongst ourselves.
And I'm a
I'm
master
also
debater.
of the view that once something has been debated at length and in depth and in honesty and with good faith, then some decisions eventually stand, and they are the decisions of the central bank. I don't have a different view from that perspective. Are some unconventional tools better than others? This is also something that we will be assessing as part of the strategic review, because I think that we need to look in retrospect and assess what has been most helpful, what has worked best, what combination of them has worked best. I don't think that I would reduce it as you have to interest rates or unconventional measures, because I think
gold
within,
is about to stop.
those unconventional measures you have a variety of things that allow to target better, to also give a better indication of time. I think in that respect the forward guidance is also a very interesting set of components that anchors into time, that gives a sequence, that gives enough clarification to something that by nature is going to be a little bit ambiguous nonetheless. But it introduces this element of mechanicity or automaticity in how things are restated in the course of time.
Ms. Weisbach? Madame la Présidente, Annette Weisbach, CNBC. I have two questions as well. One on perhaps a bit of a technical
Ooh, she put some
issue,
big
whether
money on those glasses,
you
huh?
think that these market-based inflation expectations are actually...
She was excited
is there-
all
there's a
day.
gap between them
She was
and
excited
what
all
you are
day.
expecting.
She had gone
And if
shopping.
you're,
It took 3
deciding
weeks
on
to
monetary
make.
policy, what are you looking at, market-based, or what are you expecting?
She's like, does it
And then a
clash with
second
my
one on the economic outlook,
houndstooth
because clearly there's
suit
some
jacket?
silver lining on the horizon from what I'm hearing from you, but what makes a big difference might be the trade conflict. So how realistic and how optimistic are you that we get some more positive impact from a resolution here, and perhaps also a cyclical recovery if we are very optimistic?
Oh, you can't see the video. Oh, you're not watching it somewhere else either? Sorry.
On,
You missed it. She had
on
wonderful
your,
turtle shell glasses and houndstooth. Who
You-
does that?
Your
Who
technical
puts
discussion of the measure of
turtles,
inflation.
tortoise shell
depending
with
on whether you measure,
houndstooth? Come on,
HICP,
lady.
HICP inflation as
You
is
can't do that.
with or without food and oil prices,
All right,
or whether
Max,
we
you're right.
use market-based instrument or survey-based instruments. I think we need to look at all of them. We need to look directionally where it's heading. I think I very strongly believe in the trends and in the direction. I know that we are all concerned, and I'm concerned as well, with the 0.1 more or less in that direction. But directionally, I think that we are seeing some consistent move. And, as part of the strategic review, I also think that we will have to look into that, because inflation perceptions can differ as well. I mean, markets have their own assessment and measurements for that. Households have a different perceptions. Some of the national central banks in the euro system are actually paying close attention to that and are trying to measure those components as well. The whole debate of whether or not we take housing into the measurements and what portion of housing and how do we dissect between the asset value of the land and the actual use of the premises. Those are tricky technical questions that we will have to look at and on which we should also take a view, because you're right, quite a difference between the various perceptions, anticipation, expected inflation, depending on how we measure it. So I would say at this point in time, we take all of it into account. I personally, and I don't know if Philip would agree with that or if Luis, you would agree with me, but we look at directionally whether we are sort of consistent between the various measurements. But I think intrinsically, we will have to look at how it is disaggregated as well as part of our deliberations.
Yeah,
On
she's awesome.
On the
Chris.
outlook, as I said, relatively weak growth, let's face it. What I think gives us some hope, and you alluded to that, is the fact that those downside risks that we had on the horizon are less pronounced. And I'm not going to bet on how phase one of the trade discussions between the United States and China are heading and when they will be completed and what it will deliver. But certainly if we compare with a few months back, it's heading in a better direction. That's one. We will know by the end of today what is the outcome of Brexit. Sorry, not of Brexit, I shouldn't say that. What is the outcome of the UK election, which will have a bearing on what happens to Brexit and the transition period. So that's also an element of uncertainty that is probably loosening, and that will give us a bit more clarity as to the environment in which we operate. So that's that's encouraging, let's put it that way.
Me.
Gentleman with a blue shirt. Yeah.
Thank you, Max Schröers, Börsenzeitung. My first question is also on the review. You said that it will include an assessment of the instruments used in the past, of the benefits and the risks. Will it also include a discussion about other instruments that could be used in the future, like buying equities, helicopter money, or something like that, only to be prepared in case it's needed in the future? And the second one is on the digital euro and the discussion about central bank digital currencies. A statement recently to Ecofin said that the ECB in the future needs to be prepared in case it's needed. How exactly is this work proceeding within the ECB? And do you expect a digital euro in the coming years, for example, in the next 8?
Thank you. For the
Heads up.
I think it is completely legitimate to take stock and to assess the effectiveness and the efficiency of the various instruments.
Heads up, guys.
One by
Heads
one,
up.
taken
Zip,
together,
zip, zip.
and what leverage they have exercised and what result they have delivered. As to the future, I think it's going to be
this
for
is their
the
stream,
Governing
man.
Council to actually define how, as part of the framework, we will be considering those. I see very much the strategy as a house that we build, stone by stone, one after the other, and I think that's one element that will have to be decided by the Governing Council. On the digital currency, first of all, I would like to pay tribute to somebody who is leaving
Look at the
at
kickoff,
the end
the
of the year,
monthly
who has been
pivot, guys.
instrumental.
Perfect.
At the ECB,
Because remember, to
and
hit
way
it,
beyond,
you have to go
help us
low
understand a bit better
because
and with more clarity,
you're heading
the difference
down to
between
it. And,
the bitcoins of this
right,
world,
so
the
you have to
stable
go
coins,
just below
and the
it
digital currency. And
to be
that's
put
by that
in.
I mean
So
Benoît Cœuré,
price
who's
came
been a member
down,
of the
and there were orders
Governing
of
Council,
exactly
member of the
that price
executive
came
board of
down,
the ECB,
hit it,
who is
and they all
finishing
went
at
long.
the end of this year. He committed a paper which
Amazing.
was commissioned, if I recall, by the G7, but he also very ably participated in a paper that was prepared by the ECB, that was distributed by Vice President de Guindos at the last Ecofin, if I recall, which has the benefit in 3 pages, and I think that's a huge challenge, to draw the line between what we are talking about, between the bitcoins, the stable coins, and the digital currency. And on the latter point, the digital currency, we have set up a task force, and we will accelerate the effort of this task force drawing on the resources of the entire euro system, meaning the national central banks that already participate in that research, that have already committed to the project in terms of experimentation, pilots here and there. So harnessing on all those experiments that have taken place and all the research that has already put into this effort, together with the work that has been done here also, we will, I think we're trying to do that by mid-2020, we will identify, number one, the purpose that we have with that. Are we trying to reduce cost? Are we trying to cut out the middleman? Are we trying to have inclusive finance at no cost? I mean, there's a whole range of objectives that can be pursued. So I think we will start by doing that. Then we will identify the technicalities of it all, which is not a given, particularly when you talk about a euro system. And I think that there is also great interest outside our regional area. I know, for instance, that Canada, the UK, certainly other countries way beyond are also looking very deeply into that to see if it makes sense, what purpose it serves, and how we can best deliver on it. My personal conviction is that given the developments we're seeing, not so much in the Bitcoin segment, but in the stablecoins projects, and we only know of one at the moment, but there are others being explored and underway at the moment, we'd better be ahead of the curve if that happens, because there is clearly a demand out there that we have to respond to. I would like to add a footnote to that. I think the benefit of the paper is that it also draws a line between this sort of glamorous central bank digital currency, much talked about and worth exploring, and the digital payment systems that we have and that exist. You know, we have several items that are completely digitalized, that are not at the front end, and that, you know, the bank's clients do not perceive as being in operation. But
hey guys, don't forget, we got the swing trading group meeting in about 90 minutes.
The digital payment system that have been put in place, notably within the euro system. So on those digital euro system that exist, some of which need a better take-up by some of the members of the system, I will continue to push, because I think we have something which is really worth developing and encouraging. And I'm talking here about TIPS and Peps and all those acronyms that I should not be using, but I don't know what they stand for. All I know is that they deliver in digital terms the operations of clearing and settling, sometimes in one single operation. Thank you.
Mr. Siakantaris?
Elias Siakantaris from Protothema New Money. Madam President, the ECB is running a very accommodative policy, despite the fact that...
hey guys, if you're new to the channel, would you please consider subscribing? I do webinars like this every single day, but usually we're doing more market stuff. We're not watching ECB all the time. Join the community, get involved, come on!
What are the specific signposts that the Governing Council is looking for in order to gauge the amount of the remaining slack? And if you allow me a question on Greece, Greece is delivering above average growth for years now, and quite high primary surpluses. However, and it has re-established market access. However, the problem is that it's still hampered by bailout era restrictions. I'm referring to not directly participating in QE or the ceilings in banking portfolios
Pigs for life!
Bonds. Do you think that there is something that the European Central Bank could do in order to transmit its impulse to the Greek banking system and, in a way, increase bank lending faster? Thank you.
On your first point, and concerning the use of our various instruments in order to deliver on our mandate, we have one objective, and that's price stability as defined under the strategy as it stands today. So that's the goal, that's the aim, and that's what we're pursuing. I wouldn't venture too much into this theory of the output gap, how much slack there is, how much slack there is not. And, informed by good discussions that I've had with colleagues on the other side of the Atlantic, including at the Fed, they now say actually that they had strongly underestimated the slack of the employment market. And at 7.5%, do we still have some? My hunch is that we do. But I would not guess estimate on that particular front. I think we tend to get it more often wrong than right. And that's not passing our judgment on the forecasting ability of the ECB, because I think that we do actually have more trust in our forecast.
Remember, it's not Greece, a prediction, it's an if-then statement.
To compliment Greece.
So if you're thinking about trading now, you have to say, well, if I trade, what do I need to see?
To see the progress and to see the recovery and to see the results. It's
There's a plan A and a plan B involved, about 30 pips apart.
Both on growth and on the primary surplus. And I had my views on that. Don't need to repeat them. The various public purchase programs of the ECB are subject to eligibility criteria. And they're also for the benefit of the entire euro system and all people in the euro area. So my guess is that as soon as Greece reaches those eligibility criteria, it will become eligible instantly to those programs. Until such time, we have to respect the eligibility criteria.
I blurted out just a few minutes ago that you need to start getting out.
Mr. Brack?
Etienne Brack from BFM Business. When you see the Green Deal package of the European Commission and when you see the social climate in France? Thank you.
Well, thank you very much for asking about the Green Deal. That was
what do you
presented
think
yesterday by
does this template look like it's useful?
The European Commission, my friend Ursula von der Leyen.
Pretty obvious if you're a bull, huh?
I am very pleased to see the ambition of what she has announced. And I very much hope that this ambition can actually be endorsed by all European institutions in their respective territory, with their respective mandate, and in compliance with the treaties. Okay? So what it means is that in our strategic review, we will take up climate change. We will take up the fight that is taken up by the European Commission and I hope other European institutions, and see where and how we can participate in that particular endeavor. But I'm only sorry about one thing. I was hoping yesterday morning that the taxonomy was a done deal. And unfortunately, the Coreper, as I understand, has not found an agreement yet on taxonomy, which would be extremely helpful.
You got to let it happen.
That's a call to them to find an agreement. I'm not commenting on any particular country. You will appreciate that. But when we say that we want to deliver on our mandate, we also know that monetary policy is going to be supported and boosted by other policies, amongst which the structural reforms that will improve productivity, that will improve growth, creation of employment, certainty of the economic players. So in that respect, clearly reforms are a necessary component of addressing the future.
Ms. Mastroboni?
Yes, Tonia Mastroboni, La Repubblica. Some politicians in Italy have discovered 1 month ago something which is called the ESM. And so discussion started, and some critics they say that it would imply some form of debt restructuring, and they don't want it. So I wanted to know your opinion on this, on the ESM, which the discussion should have been closed, but it isn't. And the second question is on the banking union, because there it has been Olaf Scholz that has restarted a discussion again on the third pillar, so-called, on the scheme of the deposit scheme. But there's still a big discussion going on how sovereign bonds should be considered in the balance sheets. And so, but now even the Bank of Italy is open to the possibility to limit them in the balance sheets. But I wanted also to know if you are okay with the hypothesis to consider them not neutral in the balance sheets of the banks. Thank you.
You know, on the European Stability Mechanism, and I'm saying it on purpose rather than ESM, because I think each and every word actually matters. It's about stability.
I like her. She's
it's
cool.
a mechanism that is that would be in place if completed and if embedded in the treaty, and it's European. So it's nothing that is intended to disrupt, to damage, or to hurt any particular member of the euro area. And if we had the ESM in full place, including the collective action clause and the debt restructuring mechanism, if we had that in place at the very early days in the Greek crisis, I think collectively we would have been much more capable of resolving the issue in a more expedited manner. The debt restructuring process that it took, as far as Greece was concerned, was difficult, took much longer than I think it would have with the ESM. We can't rewrite history, and it's a counterfactual that I'm using here, but clearly having rules established, having CACs, the collective action clause, that are intended to avoid the behavior of some very toxic creditors, as I have seen them acting in other countries, I think is beneficial to any country that finds itself in a difficult position. And to assume that it's intended to target a particular country, I think is completely misguided. That's my view. On the banking union, I was
That's
really
my
encouraged
view,
to see
and I'm a boss.
The paper produced by colleague Olaf Scholz, and clearly there are areas that are in debate. The weighing of sovereign bonds is clearly one. It's one where Italy is showing some openness, as I understand, and I think it's great progress. And whatever progress will happen in that area will actually be good, because banking union is one of the necessary attributes, together with capital market union, in order to make sure that we have a monetary union that works and that, you know, where the different elements actually support each other.
And we'll have the final question from Mr. Stumpf.
Hi, I'm Jesse Stumpf from
Yeah, I'll go ahead and pause it. Yeah, in regards to setting up new accounts, I like variable spread just for everyday trading, whether it's spot trading, day trading, swing trading. Variable generally under 90% of market conditions get you a slightly better spread. It's variable. Fixed or ECN. A fixed is a spread which costs you money, or an ECN you pay a commission which costs you money. In both cases, you know exactly what it's going to cost you, so to me, they're the same thing. One is soft money, one is hard money, depends on really your taxation jurisdiction and stuff like that. But the idea, like if you're scalping, especially around, oh look, it's done, that's cool. So anyways, so if you're scalping, in particular, not just scalping entries, but scalping high volatility market conditions, like news, for example, when spreads jump, then you probably want an ECN or a fixed spread. In those situations, you're going to pay a slightly higher, like maybe a half a pip or a pip more than a variable spread would in normal market conditions. But in market conditions that are, let's say, illiquid, then your variable spread is going to be higher than your fixed or your ECN commission. Okay? But I wouldn't really recommend serious just news trading all the time. Me personally, I would always pick variable. Okay? Because I do day trading, spot trading, swing trading, carry trading, and I'm not in high volatility event-driven strategies much. Okay? So I'd rather have the lower spread most of the time. Okay? Coolio? Cool. So I taught you about OCO orders. We watched the Madame Lagarde do her first press conference. She's a cool chick. I think she did great. And now we'll see how the market reacts all to that. If you're in my swing trading group, swing.fxbootcamp.com, we will be meeting at 11 a.m. today, which is about 90 minutes. So I'll see you guys over there. And for everyone else in the Forex.Today YouTube community, I will see you tomorrow. Thank you very much for the likes and the subscribes. And thank you very much for leaving comments. Oh, look at this. Just Oscar Mike, man. So, very cool. So I will see you tomorrow. Have a wonderful Thursday. I'll see you